Good afternoon, Tea with Travis. Today is Friday, September 19th, and wow, what a day. If you've been at all paying attention to the media and the news, and you've turned on the radio or the TV, you'll see that we're in quite a time right now. The Feds have stepped in between the Secretary of Treasury and Paulson, as well as Ben Bernanke, the Fed chair, and then on down to the SEC president, and then even the House of Representatives are all involved in this bailout strategy, and it's almost coming near to $1 trillion in money that's been committed to the financial sector in the last couple of weeks, between even going back, I guess, to March with Bear Stearns, most recently with Lehman Brothers and Morgan Stanley, and now AIG, and just heck, we may even throw the big three automakers in there. They may be involved in this too. But it has caused great stability and confidence in the market. If you go around the nation and actually around the world right now and look at all the different economies and how their stock markets have reacted today, actually yesterday now, since they're in different time zones, it's pretty amazing when you see the confidence now that's been displayed just in purchasing and the percentage gains in the market. We've almost got back, and almost all of the losses in the stock market over the last week. We saw almost 1,000-point decline in the Dow, and it's almost recovered an entire 1,000 this week. 400 today, where I think we're right at 400 for today, 420 yesterday, and 180 the day before. So we've, literally wiped out all the gains or all the losses. Mortgage-backed securities are kind of taking a beating because of it, but I think I'd much rather have the stability in the financial markets rather than having mortgage rates low. If the mortgage rates are low and the economy is totally in the tank and there's no liquidity, then it doesn't really matter to get a mortgage. We're down almost 72 basis points today for mortgage-backed securities, meaning it's about 0.75% down in fee if you were to get a loan today. But some things that have happened. The government stepped in, not only just on the bailouts for the private sector and the companies, but also they injected $180 billion into money market funds. There's $3 trillion invested in money market accounts right now across the nation, and when you have $3 trillion, they're not backed by FDIC like you do on a bank account. It's just kind of money hanging out there. So the panic yesterday, money was being pulled out of money market accounts with no real stability. So when the government injected $180 billion into money markets across the nation today, that money was sucked up in a matter of hours and just kind of disappeared, because when you talk about $3 trillion, $180 billion doesn't go very far into that when you equate it out. So pretty interesting. Treasury's down. The 10-year Treasury's down 209 basis points today, which is 2% on 10-year yield. So interesting as well. Oil prices are up. Gold took the biggest drop in 25 years in recording gold history and value. Everybody was putting money into gold because it was a stable flight to safety, but when the Fed stepped in and did all this, it caused all this money to be pulled out of gold. So they did a 25-year drop today in gold. Outside of that, similar to the savings and loan bailout, there's a thing called RTC, or Resolution Trust Company. They're going to set up, basically put all these toxic and exotic mortgages into basically a huge fund, and they're going to sell them. They're going to auction them basically like 20, 30 cents on the dollar. So there's not a huge loss, I'd say, for the government. Everybody keeps talking about how it's going to go to the taxpayers, but I think the reality is when the market's stable and money comes back in, we're going to see this actually be a profit center for the government, not a loss to taxpayers. So interesting times. Short selling's been banned too for 10 days, meaning there's a whole side of the market that probably a lot of people aren't aware of. It's when you basically bet on the stock of a company losing value, and people actually bet or trade stocks just on that factor. So they've banned that to kind of create some more stability, and they can extend that if they need to, but there's a lot of information there, so hopefully I didn't overwhelm you and hit you with a fire hose with information. Basically, mortgage-backed securities are down. Rates are almost nearly a quarter worse than they were yesterday, but again, I think the trade-off in having the stability in the market is worth the trade-off. We'll probably see more liquidity and rates come back down. Today was kind of a knee-jerk reaction, but it'll be interesting to see what happens on Monday. But I'm kind of excited because it could have been pretty brutal and ugly for our economy had the Feds not stepped in. So exciting times. Have an awesome weekend. We look forward to serving you, and be blessed.